But let me now welcome on board Kaleeswaran Arunachalam, the Group Head, CFO and Head of Strategy at Crompton Greaves, joining in on the show right now to talk about how their quarterly performance has been. Mr. Kaleeswaran, great to have you today on ET Now. Thank you so much for your time. Before we talk about how Q4 has been for you, we've got to talk about the spike in demand for induction cooktops, right? Have you been able to meet this sudden spike in demand? And more importantly, do you see this demand for LPG cooktops sustaining even after the LPG situation would normalize?
Hey, hi, good morning. I think the demand has been pretty robust. If you look at it, we operate in kitchen categories through two brands. There is Crompton Small Domestic Appliances and there is Butterfly. In both the businesses, we have seen robust demand on this. It's been a multiplier kind of a growth in both Butterfly and in Crompton on the induction cooktop. Coming to the second part of your question, I think we all went through COVID where consumer behaviors changed significantly, and we also saw kitchens getting modernized. And we do think this is something is a long-term trend, and the demand is going to be there for at least next couple of years before it stabilizes. So there is enough opportunity in this space, and we are also trying to participate by getting into strategic vendor partnerships and capacity expansion to cater to the consumer demand.
Quantify the magnitude of inflation which you saw in your raw material basket and how much of that so far has been passed on via price hikes and any further hikes that you may have in the offing.
Yeah, so we have been very disciplined when it comes to unit economics, which is very core for our business. If you look back, significant price increase has been taken already in Q4 to the magnitude of 4 to 5%. This is one of the highest that we have ever taken to ensure that the unit economics are protected. As a consequence of that, if you look at the trajectory of our ECD EBIT, which was around 10% in Q2, moved to about 13%, and today we are at about 15% ECD EBIT margin. As we look at Q1, we see this in two parts. I think somewhere in Q1, we think it's our best quarter. We believe that the summer is moving in the right direction and the demand is picking up. That should ensure that operating leverage should also come in along with further pricing action that we may need to take from June onwards. As you would already know that we have a flagship cost reduction program called as Unnati. We try to leverage at least 3 to 4% of cost reduction on an annual basis, both on direct and indirect cost, which would also augment the margin profile and then take it forward from there.
Arunachalam, have you been able to pass on the price increase against the kind of raw material inflation that you have seen?
Yes, up to April we have done it. May, we are trying to see how does the commodity move, considering some of the development that we are seeing in geopolitical. We want to see how does that move. And if required, we'll take one more price increase in June.
And give us a sense with regard to solar. That's going to be one of the big levers you rely on. How confident are you? 2,000 crore in terms of book is large even for your standards.
See, let's start the journey from where we began. Just about 2.5 years back, solar pumps in Crompton business was almost nothing, right? We delivered about 200 crores of business in solar pumps in FY25 and almost double that in the previous year. This is backed with the fact that the brand equity is very high. And the market leadership portion that we have in pumps as a category overall, plus Crompton being a brand that is well known, is helping us to penetrate pretty well. And that's the base on which we are getting into FY27. On the other hand, we already communicated that we had won about close to 450-500 crores of order book when it comes to solar rooftop. Execution of that by and large would happen in FY27. And we also announced our foray into B2C solar rooftop, which we see is a stable business. We also saw some of the announcements that the Prime Minister had to make in terms of how do we need to manage the cost of energy and how do we need to avoid high surge on that. And it's also coupled with the fact that some of the incentives that the government is providing a subsidy will take care of the consumer demand in both near and medium term future. Building that together, we think we are very well poised towards our aspirational target of 2,000 crores. Starting with FY27, we should see good scale up from where we left on FY26 and build on from there. So it will be a two-pronged strategy, both with solar pumps and solar rooftop together.
How are you looking at the wire segment, especially the residential wire segment where you have entered through Crompton Armor? That's a very competitive segment as well.
See, one of the strategies that we clearly called out some time back is for Crompton to achieve its target in 5 years of doubling the revenue from where we are. It is important that we expand the total addressable market. We started as a fans, lights, pumps, and some appliances category company. Today, appliances have become one of the mainstream business, both kitchen and geysers and coolers. Subsequently, we said if we have to take our TAM to 200,000 crores, it's important that we look at categories that are adjacent to us and we have a right to win, most importantly. We don't enter in any category to participate. We want to get into leadership position. And if you look at the past, when we have got it into kitchen, today we are India's #1 mixer grinder company. We are India's #1 in geysers in online. We are probably the globally #1 player in fans. And we have leadership position in pumps and lights also. As in far as wires is concerned, it's a very good sizable TAM. It's a 40,000 crore market. Crompton is a household name. A large part of Indian household has grown with Crompton. So the brand equity is pretty high. And Crompton is known for durability and reliability through these multiple decades that we have been operating with. Leveraging on that, one of the other vectors that we are bringing in deeply into business is consumer centricity. To add to that, we brought in what are the perennial problems that the consumers are facing in the wire segment today. We're trying to address that with the differentiated value proposition, which should help us to gain market share over a period of time. Back with that, as you would know, our GTM is very, very strong. We are one of the widely distributed companies across the durable segment, which can carry wires also. So we think it's a product category that fits very well with the brand. It adds on to our GTM, and we have a right to win with the product differentiation should help us to scale the revenues.
With regard to the momentum that you're seeing in fans, you've undertaken price hikes, and despite that, you're seeing very strong momentum. Of course, it's a hot summer, but is that momentum sustaining? And now on this high base, how are you likely to play it through FY27?
See, fans as a segment, we are aspiring for a 12 to 15% growth in the long term, and we are very, very confident of the fact that share gain is an important priority for us. From that perspective, there are seasonal opportunities that you play in fans, but there is also premiumization that we are taking up in a rigorous manner. Seasons, when it goes well, probably we get benefited and we do pretty well. Q1 is something probably as we get into it, season seems to be good. We should get the advantage of that. But keeping that aside, there is also a huge opportunity on premiumization, right? Today, consumers ask for fans that do things beyond functionality. People are looking at smart and connected features. There is BLDC, which is also coming in and adding value to this entire portfolio. Considering the size and scale at which we operate, and the replacement cycle of a fan coming down significantly over a period of time, we do believe there is a huge opportunity to grow fans in double digit and continue to gain share. So we don't look at only seasonality as an opportunity anymore. We see fans as an opportunity to drive seasonality, also look at an opportunity to premiumize and leverage on the BLDC traction that we are seeing in the industry. Asides, I would also like to say that in the long term, we are seeing international business as an important facet of the company. We just got a senior leader into the organization who comes with very good experience on international business. We do believe the world is getting warmer and you need reliable, durable products that can give cooling solutions. And we are starting to develop that business in the long run, which can add a lot to our fans portfolio.
Mr. Arunachalam, thank you for joining us today. It was a pleasure talking to you.
Thank you. See you.